The market drops, pops, and battles as it sets up for the next big move. Which way will it go? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that we were looking for the bears to hold the top from yesterday, and that's exactly what we saw as the market opened lower and then pushed slightly higher throughout the day before pulling back after that. Now, as the market chops around, we're set up for our next big move. The question is, which way will we go? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before I jump into the charts, if you're not in our trading room, you're missing out, quite simply. It is an amazing community, and it's not just like me and 5 friends. It's over 600 people that are staying for an average of 8 to 12 months, which means for everybody that's looking for the quick fix miracle trader that gets out after 1 week, we have people staying for years. We love it in there. It's a community. PT and I provide value, but more importantly, the members provide amazing value to each other. They support each other. They have great trade ideas. If you're not in there, you really should be. Check it out later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. Off of yesterday's high, we saw a direct low at the open. They tried to chop it lower, could not do it. And they pushed back up here, which is pretty standard behavior when you get a move like this. You're looking for a 4-5 to kind of complete the move. And that's really what we saw throughout the day. At the open, we had wave 4 pulling back right into the 382, which was 47.72. They were slightly below it, but right into that area, then pushed higher, made a very small new high. And now they've pulled back off of that high just a little bit. And we may have one more push higher to go, but ultimately I do think lower is going to be the way based on the NASDAQ, based on the pattern and what we have here and some other things that we can see in the background and that we teach in our Elliott Wave for Beginners course. I do believe that lower would be the primary path. So let's go over our 2 paths that we're tracking and look at it from there. So once we got down here, I said we should be looking at an ABC towards 47.80. We got that and then some up towards 4,800. They pulled back and forward, gave us this wave 5 up to complete C. Okay, so you have an A, B, and this is wave 3 of C, 4 of C, and 5 of C up. And the question really is, have they completed this 5th wave higher? Because they just gave us a poke higher to give us a slightly new high and then pulled back off of that. I would cautiously say yes, they have completed it. And the reason is the spike down came below 47.8575 or 47.86, which is your 50% retrace of wave 3. And if you're going to have a wave 4 and 5 again here, so you have wave 3, wave 4, and then wave 5 comes up in wave 3 of 5 topping here, wave 4 of 5, and then wave 5 of 5 up. If you're going to have that set up, you really want to hold that 50% level. And when you don't, very often it fails to follow through to the upside. So what we'd more likely be looking at if they can't push higher is kind of a 1-2 setup where we're looking to build the first leg of C down to start the move lower into the 46.40 area would be our next target. Now, how we get there is to be determined in the sense that are we going to have an ABC for A, so A, B, and C into 46.40, and that's our A leg, and then we get a B higher and then C lower. That would be our more traditional path. I would view that as the more likely path. Or it's very possible that we get A, B, and then C directly down toward that 45.50 to 4,500 area where we don't get that intermittent A leg, B leg in there. It's just more of a straight down move. So should they break it down? That's really the question is, will they hold the 46.40 area or will they take a more direct move down towards the 45.50, 4,600 area to complete the bigger pullback that we're looking for? So the next step here is the bears need to break yesterday's low. Yesterday's low came in at 47.6750. So 47.6750 becomes the target for the bears to break. Should they break through that in a 5-wave structure, we'd be looking for continuation down to at least 46.40, and then we'll have to see if they can hold support there. Now for the bulls, it is possible we have already completed this pullback, and we are trying to make a 5-wave pattern up here where we get our 5th wave, and then we get an ABC pullback. Okay, and that should hold this 47.35 area or so. And if they can't break down below 47.35 and we start to see this kind of setup here, then we're very likely to see a more direct move towards 48.81. Now, I don't think that this will play out overall. That is not my primary view. However, I will adjust my primary view based on what the market tells us. And somebody in the room today talked about, hey, you always give up and down. And the reason for that is, yes, I do always give up and down, and I always will, because the market can do both. The market literally has infinite paths it can take, and Elliott Wave narrows it down to just a few. And so now I know where my key levels are, what type of structure I'm looking for, and what type of wave pattern I need to get which path to play out. And that helps me immensely when I try to trade the market. So yes, I give an up and a down path, but I label them as primary and secondary, and the primary plays out more often than not. And then the secondary is the path that we're looking for should the primary fail. So should the bears fail to be able to break it down here, we'd be looking for them to hold support and then hit a 1 of 3, 2 of 3 breakout towards 48.80 next, and then 49.50 after that, just depending on exactly what kind of structure we get to the upside. But that would be the idea of what would be next to the upside is 48.80, then 49.50. So yes, I give up and down, and I give the key levels for up and down. I said 47.35 is the area to hold. Should they hold that and start to move higher in a 5-wave structure, then we would focus more on the bullish count. So it's really important to not only understand what you think is going to happen, but what can happen if you're wrong, so you know when to get out of your trade, you know how to adjust your trade, you know how to trade, period. And so, yes, I do give the ups and the downs, and the reason for that is so you understand when and how to switch your trades. So those are the two key paths on the ES. Let's jump over to the NASDAQ. Now, the NASDAQ did give us a much more complete fifth wave up here, but it also had a lot more room to the upside than the ES did. So the ES did not have a ton of room to its previous high, whereas the NASDAQ does. They're only at barely the 618 is where they rejected today, just above that. And they have all the way up to basically 17,000 before they really have to start worrying about the bulls starting to take this higher. So same type of setup on the NASDAQ where we're looking for this B wave to have been completed. And we're looking for a breakdown below yesterday's low. Yesterday's low was about the 16,650 area. If they break below that in a 5-wave pattern that takes us down, we'd be looking to the 16,150 down to as low as the 15,800 area in that wave 4. So in the NASDAQ, we're looking for this wave 4 right here, this Roman numeral 4. And right now, as it stands, as the market sits where it's at, that target's around the 16,000 area. So right in between the 382 at 16,150 and the 50% retrace down here at 15,880. That's a really good target, about 16,000 for this C wave 4 wave 4. And that would be our primary path on the NASDAQ. Now, should they be unable to break down and they start to push higher, we would expect a wave 2 pullback in either case. So in either case, we're expecting a little bit of a pullback because you're going to get wave 1 up, then you're going to get an ABC down for 2, and then 1 of 3, 2 of 3, and go. And so we would still be looking for a pullback off of a high in here. We'd like to actually see if this is the pattern that's going to play out. I would like to see him push a little higher up towards 17,000 first. And the reason is that gives us enough room to hit our target at 18,000. So the next target higher for the fifth wave up would be 18,000. And so we want this wave to hit 17,000 so that with the pullback and the extensions, that should be the target. And that's what we'd be looking for to the upside. So a 3-wave pullback that should hold this 16,530 area. And then from there, we'd be looking for a 1-2 setup to the upside to give us a breakout toward 18,000. But the primary path is still down toward that 16,000 area until the bulls prove otherwise by giving us a 3-wave structure, holding support, and breaking back to the upside. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there. I want you to see it for yourself. Come in, test it out, take it for a test drive. You have nothing to lose, okay? Become part of the trading team. Make sure it's for you. Do all of those things before you ever spend a penny because you can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and understand the market in a way that finally makes sense. It can be extremely confusing when good news makes the market go down and bad news makes the market go up. And quite frankly, the news cycles don't really matter. Elliott proved this a long time ago, and it continues to hold true today. When you know the key levels and what happens when they hold and what happens when they break, you have a huge advantage over the rest of the market. This gives you a clear trading plan and an understanding of what to do and how to trade the market. It is 25 videos where I go over 3 different parts. The introduction, where we go over the Elliott Wave expectations, your mindset, the KISS method and why it works, your chart setup and tools, where we go through every single tool you need to use with Elliott Wave and how to use it, as well as the Elliott Wave for Beginners area, where I go through each wave, what they're supposed to look like, what their targets are, how to measure them, how to know when they fail, how to know what to look for, all those different things that you need to know to finally understand the market in a way that makes sense. The cool part is, guys, if you don't want to pay the $67 or you don't want to pay for our advanced course that's coming out soon, you can become a monthly member and get the courses for free. In fact, you get all of our training material for free as a monthly member. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts, as well as what to expect, and all of the training material on our website. You trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. If you're looking to trade futures, individual stocks, do some income trading that PT is just killing it with, as well as some advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, the income trading method that's just killing it, guys. Those guys are having so much fun in there. And then PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and get you big multiples on your money, and it's how he structures his trades that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, the key takeaways for today. On the ES, we are looking for them to push down. They can push a little higher. They need to hold the 48.15 level on any push higher. I can give them as high as 48.25, but really 48.15 is where I want them to hold. But we would be looking for them to try to push down and break yesterday's low. If they can do that in an impulsive fashion, we would look for a 1-2 setup for a breakdown to the low side toward the 46.40 area, and then we'll see if they can hold support from there, or if it's going to be a more direct move lower. To the upside, if they are able to hold support above the 47.35 area, we would look for a breakout to the upside towards 48.81 next, and then 49.50 after that. Over on the NASDAQ, same type of setup. They had a much more complete fifth wave on the NASDAQ, but I think that's because they had enough room to do so. And now we would be looking for the NASDAQ to try to push down and break yesterday's low. They can still push up for one more quick high here and then down, but overall we'd be looking for them to break yesterday's low and push down through the support, giving us a 1-2 setup to the downside that takes us down to the 16,000 area. If, however, they are able to hold support over this 16,550 area and push higher, we would be looking for the start of the move toward 18,000 from there. Guys, that is your market update for today. I'll talk to you tomorrow.